We're jumping straight into CleanSpark today. Everyone is watching the price action, but the real story is the AI infrastructure pivot.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the nuts and bolts of this massive shift, make sure you subscribe and hit that like button. It really helps us out and ensures you never miss a beat when the market moves.
And it is definitely moving with this one.
Oh, it really is. Okay, so let's set the scene. It's January 20th, 2026. If you've been glued to the charts, you know CleanSpark has been, well, a little wild recently.
A little. I mean, we've seen it trading in a pretty wide band, anywhere from 1065 up to, 1371?
Yeah, depending on the hour you check it.
Yeah.
But that's pretty normal for a crypto miner. They're volatile.
Right. They trade like high beta Bitcoin proxies. But that 11, almost 12% single day jump we saw, that felt different.
It was different. That wasn't just Bitcoin having a good day. That was news-driven, specifically news out of Texas.
Which brings us to the mission for today.
Exactly. We need to figure out if this company's just a Bitcoin miner that got lucky with some land, or are we witnessing the birth of a legitimate new player in the AI data center game?
Because those are two very, very different valuations. One's a commodity play, the other is an infrastructure play. And the multiples on infrastructure are, well, they're in a different universe.
All right, so let's dig into the bull case first. The optimistic view, the blue sky scenario, as some are calling it.
The argument is pretty simple on the surface. CleanSpark has spent years mastering one thing, running really hot, really power-hungry machines as efficiently as possible.
For crypto.
Right. And now they're just aiming that expertise at a different target. Artificial intelligence.
Swap an ASIC for a GPU sounds easy enough.
Yeah.
But the financial part of this pivot, I mean, the numbers are kind of startling.
They're not just growing, they're exploding. We're looking at revenue going from around 39 million back in 2023 to over 131 million in 2024.
Wait, just let that sink in. That's a 234% growth rate. That's the kind of number that makes investors sit up and pay attention.
It is, and it doesn't stop. The projections for 2025 were hitting 766 million. So this isn't a side project. The company has fundamentally changed in just 24 months.
But you and I both know revenue can be a lagging indicator. For me, the real story, the real moat, is about physics. It's about the grid.
You're talking about power.
I am. This new AI gold rush. Power is the new gold. No, it's more valuable. You can't just conjure up a gigawatt of stable power.
You really can't. And that brings us to Texas, specifically ERCOT. For anyone who isn't an energy nerd, ERCOT is its own little power island.
Right. And CleanSpark's position there is. It's incredibly defensible.
Yeah.
It comes down to something called interconnection.
They bought that land, right, in Brazoria County.
447 acres of it. Now look, anyone can go buy dirt in Texas. That's the easy part. But this specific site has the potential to scale up to 600 megawatts of power capacity.
Let's pause on that. 600 megawatts. To put that in perspective for you, 1 megawatt powers what, a few hundred homes?
400 to 900, yeah. So 600 megawatts is enough to power a medium-sized American city.
It's a staggering amount of juice.
It is. And when you combine that with their other sites, they're building a regional hub that's pushing 900 megawatts. Here's the moat. You can't replicate that. Getting that power approved takes years.
3 to 5 years? Easy. You need transmission studies, regulatory sign-offs. If a big tech company wanted to build there today, they'd be at the back of a very long line. CleanSpark is already at the front.
They have the plug. In a world starved for power, owning the plug is more valuable than owning the servers.
That's a great way to put it. You can always buy more chips from NVIDIA. You can't buy a substation permit on Amazon.
But building all that out isn't cheap. How are they paying for this without drowning in high-interest debt?
And that's the next part of the bull case. What some are calling the financial fortress. Their balance sheet is surprisingly clean, a debt-to-equity ratio of just 0.3.
That's incredibly low for an infrastructure play.
It gives them flexibility. And they just built this massive war chest. They secured $1.15 billion in financing.
But the detail that matters here is how they did it. These are 0% convertible notes.
Okay, let's break that down, because 0% sounds too good to be true. How does that work? Lenders aren't charities.
No, they're not. They're not betting on interest payments. They're betting on the stock price. The deal is they can convert that debt into shares later, hopefully at a big profit.
So CleanSpark gets over $1 billion with no monthly interest payments eating into their cash flow while they build.
Exactly. It's a huge advantage. And it's all leading to what analysts are calling a cash flow inflection. They're burning cash now, pouring concrete. But the models show free cash flow swinging to a positive $244 million by 2026.
That's the classic J-curve. You go deep in the red to build, then shoot way up into the green once you flip the switch.
And it seems like the smart money is sniffing this out. We're seeing whale alerts on block trades, options activities up, and institutional ownership is at 43%.
And firms like Voleridge and Dimensional aren't buying a Bitcoin miner. They're buying an infrastructure play. They're buying the power contracts.
They see a utility company disguised as a crypto stock, which is why you're seeing these price targets of $22, even $30. That's over 100% upside from here.
Okay, that's a very compelling blue sky story. Buy the miner, get the AI utility for free. But let's look at the flip side. If it were a slam dunk, the stock would already be at 30.
Absolutely. There are massive risks here. The biggest one, in my mind, is the empty building problem.
Execution risk?
Exactly. They have the land, they have the power rights, great. But do they have a tenant? As of today, we haven't seen an announcement from a big tech name. No OpenAI, no Microsoft, nobody.
It's a build it and they will come strategy. And spending over $1 billion on a maybe is terrifying.
It is. And we need to talk about the technical side, too. It's not as simple as swapping out some machines.
Oh, not at all. A data center is not just a data center. A Bitcoin mine is basically a shed with giant fans. If a machine overheats and shuts down for 10 minutes, you lose 10 minutes of revenue. No big deal.
But if you're running a training model for a major AI...
If that cluster goes down for 10 minutes, you could corrupt weeks of work. You need what they call 5 nines uptime. Redundant power, redundant cooling. It's an engineering challenge that is orders of magnitude harder than mining.
So being a good go-kart driver doesn't mean you can drive a Formula One car.
Perfect analogy. And if they stumble on that execution, it leads right into the second big risk, dilution.
That $1.15 billion,
yeah,
it's a double-edged sword.
It is. Those convertible notes have a floor price, $19.16.
Explain why that number is so important.
Well, the whole deal works beautifully if the stock is flying high, well above 19 bucks. The lenders convert their debt to stock, everyone's happy. But if the stock languishes below that price?
Then CleanSpark still owes them. The money is debt. Or they have to issue a ton more shares at a lower price to pay it off.
And that's the dilution death spiral. Your slice of the pie just gets smaller and smaller. It's a real threat if there are delays in Texas.
Which might explain some of the insider signals we've seen.
It might. We saw a couple of directors, Cavallari and Wood, selling shares back in December.
Now, to be fair, people sell for a million reasons. Taxes, buying a house, you never know.
True, we can't read minds. But optics matter. When you're in the middle of a bet the company pivot, you want to see insiders buying, not selling. It just makes investors a little nervous.
Yeah, it adds to the uncertainty. And then there's the near-term earnings picture.
Right.
We talked about that great cash flow inflection in 2026, but the road to get there looks bumpy.
It does. Forward guidance shows a potential earnings contraction. We're talking negative 39% EPF growth this year.
Ouch. Why so bad?
CapEx. They're spending all the money now on the build-out, but the AI revenue hasn't started flowing in yet, so the profit and loss statement is going to look ugly in the short term. You need a strong stomach to hold through that.
It's like renovating a house you plan to rent. For a while, it's just bills going out and no tenants coming in.
Great analogy. Okay, so for the listener trying to make sense of all this, what are the key signposts to watch for?
I see 3 immediate catalysts. First is the Q4 earnings release coming up late January or early February.
And when you look at that report, you want to hunt for one specific thing: the split between Bitcoin mining profitability and the AI CapEx guidance. Is the old business paying for the new business?
Right. Catalyst number 2, and this is the big one, the tenant.
This is the trigger. A press release that says CleanSpark signs a $100 million lease with, a Google or an Oracle.
That's the moment that validates the entire thesis. It proves the building won't be empty.
It turns speculation into valuation instantly.
And finally, number 3, you can't ignore the macro. This is still, at its core, a crypto stock for now.
It is. The Bitcoin halving cycle isn't until 2028, so we're in a good part of the cycle where prices are high. That high price is generating the cash that's funding this whole AI adventure.
If Bitcoin crashes tomorrow, this gets a lot harder to pull off.
A lot harder. So even if you only care about the AI story, you have to keep one eye on the price of Bitcoin.
So let's wrap this up. We've got a company attempting this massive metamorphosis, from a digital gold miner to a critical utility provider for AI.
It's a high wire act. If they pull it off, the current stock price is a bargain. If they stumble, well, they're a miner with some very expensive empty buildings in Texas.
So here's the final thought I want to leave you with.
Yeah.
Fast forward 1 year to 2027. Do we look back and see CleanSpark as a Bitcoin miner that did a little AI on the side?
Or do we see them as an AI infrastructure giant that just happened to use Bitcoin to pay the electric bill while they were getting started?
That shift in identity, that's the entire trade right
It
there.
really is.
All right, that is the lowdown for today. We hope this clears up some of the noise.
Thanks for listening.
And remember, nothing we say here is financial advice. Always do your own research, check the charts, and we will see you on the next one.